I'm really, uh, I'm really professional, if you will, you know. And so I feel like right now that is turned off. So you can be who you want to be in here. There'll be no judging. I do ask that you be respectful. Obviously, don't say anything silly to offend anybody. But this is a serious time as well. So I do want to talk about 2024 first, and then basically I'm going to go through some charts. The first two or three, I'll show you how I chart them, and you can take that back to your computer and you guys can use that on the charts to just kind of see how I'm setting things up going into this year. Because honestly, it's just like I just put down on X or on Twitter. I told a lot of folks, I'm like, if you're looking at a daily or a weekly, I think you're doing it wrong. Especially, if you go on Twitter right now, you'll see a lot of folks talking a lot of FUD, right? They're spreading a lot of fear, and that fear it can get to you, and it can really mess your head up. And we are only 3 days into the trading year, and it's already, hey, the world's coming to an end, right? You guys feel what I'm saying? And at this point, I really think it's important for you to just kind of zen out. All right, take it in. I want you to smile. I want you to know that everything's going to be okay. If you've had a hard time already 3 days in, 3 days in is no, it's not a trend. So if you're not doing well, don't give yourself a hard time. All right. If this is not like it was the last 9 weeks of the market, it's okay. It's just a time for you to understand that the market is digesting. And here in the Trinity room at Simpler, I can't say it enough, but I really mean it. Melissa and I, and all of you, are here for each other, and I truly mean that. I don't know anybody that works harder than we do. And that's not to pat myself on the back. What I'm trying to tell you is I could bring my wife in here right now. I could tell you to bring my kids in here, and they would tell you the same thing. Like, you guys are my extended family. We will probably have times together where you want to celebrate and meet up and say, hey, man, I will fly there and I will take you to a bar myself and have a beer. I can't wait to meet you. And there'll be times that you might want to just cry. All right. Like, all of that's going to happen this year. And I promise you, it's not going to be all roses. It's going to be difficult at times. And the one thing that I want you to concentrate on this entire year is journaling your trades, but not only journaling, but understanding what your allocation is going to look like going into this year. I've already set some expectations out there. I let you know, hey, my starters and my equity will be 5 grand. My total will be 20 grand. Okay. So you'll understand if I put $5,000 into a trade on the equity side, then you know that I'm most likely going to scale in. Okay. Unless I say it's an intraday trade. If I say my total value of options is going to be $2,500. If you see that I only buy $1,000 worth and I bought, 2 months out, then you could probably assume that I'm going to go ahead and also add into that trade. Okay. So there's a lot of things that are right here in front of you. You guys know that we're super transparent. We're the only ones that have API alerts. And I'm not talking about just here at Simpler, guys. I'm talking like all across the board. I don't know any other service that provides the transparency that we do. Okay. Now, listen, tonight, again, I'm going to go over the charts. These are just me giving you a technical analysis by using the indicators that I use. But if you don't have the indicators, it's okay. A lot of this can be drawn on your charts. A lot of this on higher time frames. We're relying a lot on inside and out formations, which are really easy to find. We're using the cloud. You can find free clouds out on Thinkorswim. So, my cloud's a little bit more robust and has buy and sell signals to make things easier, but you can get through this and find out how to chart these things just by manually doing that. And that's what I'm going to do tonight with you guys, okay? All right. So, let's go ahead and get started. So this has nothing to do with tonight. This is the ES futures, and this is a 1 minute chart, and this is your PMZ at night. I want to remind my Trinity traders here that the PMZ can also be used at night. I think sometimes we lose sight of that. And what's cool about being a futures trader is you can trade all day and night. Okay, except for the maintenance period. So this is the night PMZ, which is pretty cool. It's a little bit different because your trading view code is just a tad bit different, but just notice that it also tells you your risk at night, whereas the Thinkorswim one doesn't. You have to look at the lines and go, okay, this is what my risk is. So at night, using trading view, you can actually see everything you need to see right here. Okay. Anyways, let's go ahead and move on. And before we do that, I'm going to cheers to you guys and say thank you for being here. I really, really appreciate you. I don't know how long this is going to take. My wife has given me a free card. I could be here for 2 to 3 hours, but we'll try to just make it like an hour and a half. Melissa, if you feel like talking after I go through some of these charts or you want to jump on, please feel more than welcome to butt in anytime you want to. And if there's any charts after I get finished, go ahead and let me know as well. All right. So definitely, definitely here for you guys. Let me do one last thing before we get started, and that is remind myself exactly what charts I'm going to be looking at. I'll put some of these out here on Twitter. So I'm going to come right over here and take a look. And we're just going to scroll down here. Did I already ask you guys, what are you guys drinking? Seriously, what are you guys drinking tonight? That's what I want to know. Are you drinking water? Water on the rocks. Ooh, I love water on the rocks, man. Oh man, I love Cosmos too. Hot tea. Oh, I love some hot tea. I love a hot toddy though. Bourbon, PBR, Malbec, very nice. Dry red wine, very nice. I have water. This is all water right here. There's a big old jug of water. Yeah. So, all right, we're going to get started here with ES futures, okay? And the first thing we're going to do is we are going to look at a yearly candle, okay? And there's a lot of things that we could do when we look at a yearly. First of all, I'm going to tell you if you want to do this at your own pace after we get finished tonight, you can always save a chart on your Thinkorswim by right clicking, and then you come down to your drawings right here, and then you're going to create a drawing set, and then you're going to name that drawing set. If you guys notice, mine says 2024 Future Outlook. Okay, so this is something that I can go to at any time to take a look and see how my 2024 chart is working out. Now, the masses are looking at the last 3 days and they're already making opinions that the market's going to crash and that we're in for the worst 2000 or the worst look that anyone's seen in so many years. Now, when I take a look at this chart, the first thing I think about is 90 to 95% of traders are always wrong. Okay. And do I want to be like the 90, 95% of traders out there? And you guys have heard me say this. And if you haven't heard me say it, I'm going to say it again. I am not like 90% of the traders. I look at the market a lot differently. Now, I do fall into a small group. I'm not the only person that looks at supply and demand. So there's a lot of people out there that are just like you and I. All right. Now, what we are looking for when we open up a trendy chart, and you may not see it when you first start this venture, right? Things may not pop out to you, but the first thing that I want to be looking at is looking at this chart and saying to myself immediately, and I want everyone out there to understand this is a yearly chart. That means every single one of these candles represent 1 year. Okay. Then we have this beautiful trendy cloud. It's not that special when you look at it. It's just a cloud, guys. It's filled in. It's got EMAs in it. It's got a 9 EMA. I believe it has a 22. Let's look at it. Let's just kind of open it. Edit study. 9, 13, 22, and 44. Those are the numbers that I'm using for my EMA cloud. Again, it's a little bit more robust than that, but that's all you guys need to know as far as these numbers are concerned. When we go back and we can look and get a good glimpse of this, what would you say? What would you guys say about the cloud since 1990? What would all of you say? What would you guys say about 1990 to present? What are you seeing just off of that one look? up and to the right, support. So let me ask you this: if price came down into that cloud, would you guys try to buy? Hell yeah, we would, right? Like, why wouldn't you? Why? I mean, you'd have to, because there is nothing here that says you shouldn't buy this cloud when we pull back to it. Okay. Yeah, of course, there's a couple times where it came back and tested the very back end of that cloud, but it has not done that since 2009. Okay. So I want to first get that out of the way, and I understand that it's far, far away. Matter of fact, if we look at the 9 EMA right now, folks, it's at 37.41. Okay, is exactly 1,000 points from the current price. Okay, 1,000 points. Everybody know what that equates to when we're talking about the SPY? So when you're talking 1,000 points in the SPY, we're talking a lot of points in the SPY, right? How many points are we talking? Anybody know? $100. That's exactly right, Melissa. So $100, it to me would be max pain in 2024. And as we continue to move on, I want everybody to know, even though I have what's called a 2024 projection on every single one of these, and most of these you will see to the upside, there's a reason why. Because if you look at the past years, we typically make higher highs. Okay? Now, so that's a probabilistic thing, right? There's probabilities here that suggest we will continue to move to the upside. And especially when we look at election years. Okay? Now, again, there's a if this, then that scenario. All right. So everything that I'm telling you tonight is a if this, then that. Okay. If price were to come back to this cloud, I'd be looking at buying it. And there's several reasons why, and I'll get into that here in a few minutes. Okay. But a couple other things that I want you to take note of. These are yearly candles. And since we are looking at the yearly, we have had one, two, three, four, five, six buy signals according to this chart. According to Trendy Methodology, according to what we have coded in here, that every single time, one, two, three, four, five, and now we're on the sixth one. What has happened after each one of these arrows? What do you guys see? After each one of these arrows, what's happened? It's been an up move. It's been a new high. That's exactly right. Now, again, the past means nothing, right? But we do have a chart here that says one, the cloud is support if we happen to go back there. Two, every time there's been an arrow, they have been able to make a new high in the market. Matter of fact, the candles have closed up even higher than the previous candle. Okay? So that's the first thing that I want to talk about right there. And then the third thing is notice on your trendy indicators, these arrows are identifying demand zones. Okay. So they are identifying demand zones for you. We put a special code in there to identify certain structure. So all you have to do is if price were to come back down, is I want you to look down and to the left. I want you to look for these arrows, and these arrows identify areas where buyers are willing to step in. Okay, so that's the third thing that we can see when we look at this chart using the yearly. Okay, so everything looks great right now. All right, everything looks amazing. And when you, sure, look at the last 3 days, it's easy to go, oh man, things really stink, right? But I want you to hold on to the bigger picture because there's one thing that I've learned over the many, many years now is that if you get tied up looking at the smaller time frames, you lose sight of what's really happening in the market. And it's really easy for us to lose sight very quickly. Now we're going to go ahead and move on to a quarterly chart. All right. So what did we learn about the yearly? What did you guys just learn by looking at a yearly candle? Not many people do it. Matter of fact, if you go out there right now and you search high and low on Twitter, which is one of the best platforms for trading, how many traders do you think are showing you a yearly chart? Seriously, how many people do you think are going over yearly charts with you? Most people are showing you shapes and stuff on a daily or a weekly chart. Am I right? So we're already starting tonight off in a whole different perspective, okay? Because most people and most of us, right? I'm not trying to make fun of us because I'm included in this. We have our brains are so small when it comes to trading. We're only focused on what's happening right here, right now, and we want money and we want it right now, which is like absolutely crazy, right? When really all we had to do is just be a little bit more patient, all right? Patient spelt with a Y, P-A-Y, shent, okay? This is your quarterly candle, okay? Every candle on this time frame represents 1 quarter, okay? This is the only charts that we'll be looking at tonight right now, quarterly and annual, okay? So let me get through these. One thing that I want to show you on the ES futures when we look at this, okay, is what? We look back, and I've told you some of this, if we go back and study every single one of these buy signals, even on a quarterly, it has turned into higher highs. It has never let me down, okay? Now, there's something very important to talk about when it comes to this quarter, because it could be true. Maybe this quarter's terrible, all right? But there's one thing that I want you to take away from this ES futures chart. And again, if you don't trade futures, it's okay. We're also trading SPY off of this. Every 10 points equals $1 in the SPY. This blueprint is golden for your SPY and your SPX charts, folks. All you need is this one blueprint, okay? Now, let me ask you a question right now. If this candle right now is inside, and by the way, it is, if this candle is inside, and it's inside of last year's candle, what can we assume, right? Assume with this candle. Can anyone tell me? Matt W. I love that answer. Matt says absolutely nothing. It hasn't closed. That's right. We have a year until that candle closes. However, what we can take away from this, guys, all right, what we can take away from this is that it is inside, and I want you to repeat this after me because you need to get into this habit. If this candle is inside right now, the idea is that it is inside until proven otherwise. When does it prove that it's no longer inside? It proves to us that is no longer inside when it goes above 48.14 and 3/4, or it drops below the body of last year's candle. Okay, guys? Everybody paying attention here? At or below. And I think after out, there we go. 43.45. Okay? 43.45. So it's inside the entire time as long as it stays within the body of last year. Okay? Continuation candle. It's not continuing to the upside until it raises over 48.14.75. Now, my projection for 2024 puts us into 53.89 by 57.61. 53.89 is a modest what? What are we looking at there? 600 points, 700 points, is $60 to $70 in the SPY. And if we were to hit 57.61, another $100 in the SPY. Okay? Everybody understand? And the way that I'm getting this is not forward multiples. I'm not looking at anything else except some Fibonacci extensions. That is it. I'm using Fibonacci extensions. I'm using inside and up formations. I'm using inside and down formations to identify demand and supply. Now, I've done this almost 4 years in a row now, and almost every single year, my charts are almost to the tick, and it's pretty neat. But you're going to have to be patient. And what I mean by this, if price comes down to here, we'll be looking to buy, okay? If shit hits the fan and it gets really ugly and everybody's running for the doors, I'm going to be buying in this green zone. Okay? That's what's going to separate us from the masses. Because I guarantee you, if price hits there, people are scared shitless. Okay? I promise you that. You will not want to buy when the price gets down there. Ask yourself, how many indicators tell you to buy when the market's going down? Nothing. I know of zero, except for demand and supply. Okay? Very important for you to understand that. Now, this area right here, 200 to 400 points, I'm saying that we could see a possible turn back to the upper yearly edge. Well, guess what? We've pulled back to the upper yearly edge already. Okay. Now we know as soon as price dipped underneath this body, this was in the market's hands. We have to let it go, let it do its thing. Look where price is now, folks. We've come back to the yearly edge, and before we started 2024, and I talked about this in the broad market analysis, once we start to move above an edge, we look to come back and retest that edge to find support. And I actually just came across another X Twitter handle out there that was talking about, hey, we might be at some support, we might see, which is pretty cool because the majority of the masses are out there, looking for a big move to the downside. All right, but we're coming into a level. This is a trendy edge, and what's really interesting about this year is that our edges are really far away. Notice that our lower yearly edge is down here at the bottom of the demand zone, and then our upper edge is right here. So this is support until proven otherwise. Matter of fact, 2023 rally support is 46.58. All right. And all these charts are in your notes, guys, right up here. So don't worry. You can go there and you can copy these. Okay. But this is your support, and I want to show you how we are going to operate off of this. As far as the quarter is concerned, all I care about is whether or not we can hold 23 to 38.2% of this candle right here. Okay. Notice where my 2023 rally support is. It's sitting right at the 23.6. Does everybody see that? And I promise you, I'm not making this stuff up. I have sat down with many traders over the years when the market wasn't doing well. I pull up the Fibonacci's, and you would be shocked how many people are like, yeah, but all these things are going on in the world, and we're in a bear market. They said this last year, but I showed you guys that we never got below the most crucial Fibonacci, and therefore the Fibonacci that I teach you said to stay long. And just like when we were in Orlando and I told you that we were about to bounce and it was time to get on the long side, I was what? Bob, you probably know. You were there, right? Bob was at the table with me, right? 9 out of 10 traders were saying we were headed to the downside, all right? And so these levels work really, really well. And the reason why I know they work well is because I went back and studied them since the inception of the market, okay? So what do we say about the ES futures going into 2024? We are merely at support, and after such a big move, we are looking for buyers to show up before earnings. Again, my 2024 projection, 53.89 by 57.61. If we get to 50.17, and don't worry, I'll be coaching every single day for this entire year. If we get there, I'll be letting you know where to take caution, why to take caution, and if we pull back to certain levels, I'll be telling you why I'm buying and how long I'm buying out. Okay? Everybody understand that. Is there any questions about this chart? And again, we are looking at a 2024 projection. I'm not talking about tomorrow or next week. This is a bigger picture. Does anybody have any questions on the ES futures here? All right, Simon, go ahead. But did you execute, Arizona? All right, so we have secondary. Someone asked me to throw up the fib extensions. So your fib extensions for the 2023, or sorry, 2024 projection. I am taking the anchor low of 2020. I am then anchoring it on the high. And then when we do the Fibonacci extension, you can see a little black line right here, guys. See that black line? And then boom, 23.6 to 38.2. That's what I'm identifying here to the upside. That's how we get the projection to the upside. So on your demand zone, so from a yearly perspective, okay, this is basically, as I was saying, if something really bad happens, that's where these demand zones come in. Okay. So this isn't the buy necessarily. It doesn't mean that we get down there, Simon. This is like when you look at it from this perspective, these are huge demand zones. These are where we are looking. When I talk about institutions buying and selling, I'm not talking about these small time frames that we look at every day. And that's where you'll find amateurs telling you that supply and demand is on a 5 minute chart. And again, those are just called pivots. This is where the big money's hiding. This is where, if you wanted to, if you guys wanted to, and again, don't repeat this, but if you want to pull up a volume profile, you could do that and check my demand zones and go ahead and look at your volume to see if you got volume there. But remember, volume equals A plus B, right? That's what a lot of people say, but it's A plus B equals volume. So where the buyers and sellers have already placed their bets here, they took the trades, and they actually, people always ask, are there still block orders there? They absolutely stay here, and big institutions are not by any means chasing. All right, so they have residual that they're looking for to hold, and if price were to come into those levels, that's where we'd be looking to buy again. So even though these levels, like this level here, was created in 2020, I always get questions like, hey, would there still be buyers there? And the answer is yes. Stevie B, so this demand zone right here, so and for anybody that may be new, so remember we use hollow and filled candles. So the filled candles close at the bottom and the hollow candles close at the top. And what I'm doing in this particular demand zone, okay? And remember, there's different ways. We're not going to go into that today, but there's three different ways typically that you can create a zone. And so one, I could come up here, Stevie B, and use that wick, and the zone would actually fall right there at the 2023 rally. But I already got you covered. So I already put the green line there, and I'm saying, hey, at this level, we could see a bounce at the 2023 rally support of 46.58. What I've done, everyone, is if you look very closely, and I'm going to zoom in here, this is a trendy mid edge, okay? So I'm using the top of the level. Give me just a second. What's up, babe? Did I accidentally grab your phone? I don't think so. Yeah. So this is the trendy mid edge, all right? And what I'm doing is I'm using the edge, okay? And I'm going underneath the body here, but I'm still using the backside here. That's all. This is just the other way. And all I'm doing is encompassing this structure right here, okay? And all I'm doing is using my trendy edges, okay? So we have the bottom edge, the mid, and the top right there. Yep, no problem. Yeah, so for the fib extension for the projections, and remember, so trendy rule here, and this rule should be across the masses, but a lot of people don't do this. First of all, on Thinkorswim, just hit the wheel on your mouse. Okay, I'm gonna freeze my screen, and you're going to use this one right here. Okay, this one right there. All right. So watch, go right there, fib extension. And again, you just take it, you plot it or anchor it wherever you want to anchor it. You come up to the high, double tap it, and then you'll see that you get these projections, okay? So if you notice, so I said I had a secondary and a primary. So your primary for 2024 I am selecting this 2020 rally into the high to get this box, okay? And then I'm doing a secondary anchor from here to get this possible turn back to your upper yearly edge. And listen, you may not, if you're brand new to trading or maybe you've been around for a while, I take this stuff in, guys. Come back and watch this because I promise you, my charting speaks for itself. I'm very, very confident when I put these charts together. They're the best charts out there. All right. So watch what I'm doing, learn from it, and if you have questions, please ask. Yeah, that's right, Matt. You can. Let's see. Let's go. Let's go down. All right. So we answered those questions. Now let's go ahead and take a look over here. We're going to take a look at the Nasdaq. Okay. And we're already on 2024 projection. Now, a lot of these are most likely going to look the same. Okay, a lot of them probably will. So that's why I said I want to go over 2 to 3 of them. All right, and then I want to be able to come back and say, all right, now what I've taught you, anything that you want to look for 2024, I want you to apply it. Guys, let's take a break. Cheers again. I need to take some water in. I tried to talk my wife into having some tequila. I was like, I just watched something on like a Facebook reel or something. And it was like, if you're gonna drink and you want to have like the cleanest alcohol, guess what it was? Anybody know? Well, I just told you, tequila. It's actually tequila. Isn't that crazy? Because of the agave or something like that. All right, guys. So this is what we have here. Now, this is the NASDAQ futures. All right. So you guys can see here, this is pretty clean. This is a yearly candle. And you could see what's really nice is that we have this candle that closed over the 2022 candle. And once again, just an inside candle at the moment. Okay. So we'll quickly go in here. You guys can see once again that the 9 EMA is definitely support, and it happens to be confluent with the 61.8 of 2022, and I'm going to show you that here in a second. And all this stuff is really, really neat. I'm really a big nerd when it comes to charts because once you start looking at this stuff, it just will make the hairs on your arms stand up. You're like, holy crap, man, this is really awesome. So. All right, so this is the quarterly. And when we go back on a quarterly, I want to be able to kind of point some of this stuff out to you. So we're going to go all the way back on the NASDAQ, and I'm going to wake you up and ask you a question again. Since 2011, you guys can see that the cloud has been absolutely a place to buy. Would anyone disagree with that? Would anyone disagree that the cloud's been a bad buy since 2011? Would any of you disagree with that? No, right? I would hope not. Okay. So here's a question for you that you may not. I'll see if anybody can answer this. If the cloud breaks, when do we go long? Anybody know? When do we go long? Arizona Bob, think about it. Come on, guys. No, if the cloud breaks down. So here, let me show you. Say we're on a quarterly, and this starts to happen, and it breaks. When do we go long? That's right, Jersey Joe. All right, I've been watching everybody. Demand zones, guys. Demand zones. Supply and demand. All right? It breaks underneath this cloud. The question would be, okay, so what if this happened? So if this cloud were to kind of stretch up a little bit, it comes up here and it comes up here, it comes up here and it starts to flatten out. Do something like this, but this breaks down and we're like, holy hell, this is a lot worse than we thought. And it breaks down. Guess what? You're in a demand zone. The only time that we go long when we break down below these clouds is when we come into a demand zone. Okay? That's it. When you come in to a demand zone. Now I want to show you something. Remember, we use Fibonacci extensions from 2020 into the high. Let's go ahead and do that together. Now check this out. I'm going to show you some really cool things about the NASDAQ. Okay? Right here, when everybody was freaking out, boom, 2020, this is where we're anchoring. We started to break down. And I'm going to use this Fibonacci with you every day. All right? And so these things are really, really important for you to understand. I will tell you, hey guys, the 23 and the 38% are bullish of the trend that we are identifying. Okay? Now, what does that mean? That means during the day, we come down to this 23.6. I'll say something like, hey, we should try to long this. All right? It works for a while. You might get like a 200-point push to the upside. Everything's great. But then you break down again. All right? Now we are no longer bullish about the 23.6, so we start to, our pucker factor starts to raise a little bit. And as soon as we break the 38.2, it's over. We're no longer bullish anymore. Okay? Now I'm not saying that we don't catch it up here, but you can catch it when we break below here. But what's really important about this particular chart is the 618. The 618 is a golden Fibonacci. And all it says, and if you don't know this already, that means you haven't watched our videos, all right? All it means is when you anchor the Fibonacci from here to here, okay? All it means is that when you break the 618, the golden fib, if we close below it on the time frame that we're using, it means that this trend is no longer intact. But that never happened. And we use the right fibs, and we understand that this trend is still intact when the masses are running for the hills. It really is that easy. But I need to reiterate every single time that I bring you down into this zone right here. I need everyone right now to agree that when we get there, okay, when we get there, you have to be brave. Because I promise you, you will not trust what you have seen. You will not trust, even though the charts have told you over and over and over that it's a great place to try and buy. You will doubt yourself. Okay? You will doubt yourself. And the last thing that I want to do is find that you fall into the same things that I fell into for many years. And I doubted myself. And I found myself going, oh man, I should have bought that. I should have did that. I was going to do it, but everybody was watching me. I was scared. Okay? I don't want you to be scared. What I want you to do is get fired up from me teaching you this stuff and going back and looking and go, damn, he's right, man. And the next time this happens, I'm going to know what to do. I think it's one of the best feelings ever being a trader and finally coming to the realization that you've been thinking like everybody else and you've been scared and you don't do things and you sit on your hands, you watch prices go up and you're like, damn it. If I just would have did that, man. I remember when John taught me the 618, if I just would have bought some out of the monies and not put too much pressure on myself, those out of the monies would have went up 1,000%. Holy crap. And you buy on these charts, guys, in case you're thinking, hey, well, how long do I buy? When you're buying on a quarterly chart and a yearly chart, you're buying time. You're not buying tomorrow. All right? This is for the big boys. All right? Everybody understand that? This is the kind of stuff when I tell you there's a zone down here, and then I tell you there's a supply zone up here, and it's literally 2,000 points away. You're playing with the big boys. It's time to buy some time, let it sit, and trust the charts. Okay? You guys going to be ready when we get there? If we get there, will you be ready? That's my question to you. All right. I'm going to remember who says yes, okay? Like, seriously. But, here's my thing, guys. A lot of you, all right, a lot of you and me, you lose $500 on a day trade, but when I tell someone to buy a dip and put $500 into the next 3 to 6 months, they're scared. And I'm like, why? Do you hear what I'm saying? Like you'll lose $500 taking a day trade, but you won't put $500 right here when it's actually more beneficial from a probability perspective and a risk to reward. Ask yourself, why won't you do it? Most likely it's because your process wasn't that good and you kept losing throughout the year. And then when we finally get there, you're even more scared. You're like, man, well, I've already lost 10 grand this year. I don't want to lose another 500, right? I think that's what happens. I really do. All right. But just remember, we want to be going long when prices are going down into our levels, and we want to be going short when things are going into our levels to the upside. Okay. So let's talk about projection really quick on NASDAQ and talk about how I arrived at these. Pretty much the same exact thing. I just showed you where the 618 came from. Notice that this demand zone is a lot like the ES futures demand zone. I basically came underneath the body just a little bit above it, and I use the bottom of this. This is your inside candle, or sorry, that is your mother candle. Let's start this over. This is your mother candle, your inside candle, your up candle. This is your demand. And the reason why I'm going underneath the structure here is because I want to give it just a little bit more room. Okay, that's all. Just a little bit more room to let this kind of come in. Now, what I love about this chart, and I hope that you can see this as well, is that what are you guys noticing about the clouds? Yeah, it's a wide one, isn't it? Mm-hmm. Deviation is pretty far away. It's a sitting. It's getting wider. Strong to the upside. Nice. Getting wider. Yep. And another thing, how about your cloud is confluent with your demand zones? That's right. Approaching confluence with demand. Exactly. So this gives me even more confidence. If price were to get there, I want to go long. You understand what I'm saying, Devin? Okay. Demand, clouds. Okay. All right. So possible bigger rejection here. And this is my 2024 projection here. Okay. Same thing. If you want to, you just grab your Fibonacci extensions. You could use the rally. And guys, if you've never watched my Fibonacci videos, you should watch them. Not right now, right? We're going to concentrate on this. But I teach you how to find the most recent rally and why I pick the areas that I pick, okay? And so they are different than some of your traditional traders who, um, do their thing. So I'm using the 38.2 and the 50 on the Fibonacci's here. And the reason why I'm using a 38 through 50 on the NASDAQ is because the NASDAQ typically leads. So I'm giving it a little bit more room than the ES futures. So the ES futures, I'm using the 23 and 38, whereas on the NASDAQ, I'm using the 38 to the 50 because once again, tech has always been leading. Okay. So that's where I come up with that 2024 projection. Current price is at 16,456, and I'm looking at 20,530 by 22,523, and there could be a possible bigger rejection around 18,146 and 19,010. And the reason why there could be possible bigger rejections there, let's just say that buyers do come in at the 23 and 38 of last year's candle. All right. And then we start to bid up and we make new highs. And in a couple weeks, everybody's like, what the hell? What dip? Right? I should have bought that dip. What I'm saying is it makes sense to me on an election year that potentially we are coming into smaller time frame demands. We pick up, we make a new high, but then we pull back after we start getting more catalysts around election, right? Well, this person's going to be the president, or this person, and the market doesn't like it, or whatever the BS that comes out. It's just a catalyst to push price. And so I do believe if we get some sort of run up before that, we could do something like this, pull back, okay, like this, kind of just hang out here and then wait for something, and then boom, it looks like this. Or if I'm totally wrong, you're going to know. It's going to come down here, it'll bounce, okay? But then it only bounces up to supply, and then we break down, and we head down here into these levels, okay? So if this, then that, for right now, everyone, we are in a bullish trend, okay? We are just digesting and coming in a little bit. But these are my projections for this year. I will keep you update every single week on these levels and where we're at and why we're at them and what we're going to do and so forth, okay? All right. So the rest of these we'll go through pretty quickly. All right, just to show you, not all of them look the same. So we're going to come over here and look at the year. We're going to look at the RTY. And let's go to 2024 projection. Now check this out. This one's pretty cool. So what I'm going to do is I left the Fibonacci's on here for you. All right, so far as the yearly goes on this one, and let's just take these fibs off really quick. I'm going to hit delete. On a yearly, check this out. We are inside for 2023. We were inside. And right now, again, only 3 days into the year, we are inside again. What I love about this chart, and you guys know we call the very bottom on this before that big rally, then I gave you targets and we hit the 200 target before the end of the year. This was a huge one, all right? What I love about this when we're looking at the yearly, as soon as price goes over this middle candle, what does that mean, guys? As soon as price goes over that middle candle, what does that mean? Inside and up. Inside and up, folks. Inside and up. This is, I love this. This looks like to me, all right, this says America all over it, right? For me, it does. All right. I don't know. A lot of people are saying, small caps, they're always in trouble, right? But if this thing rounds out, okay, if this thing rounds out and the market starts to bid and we start to move like this is an inside and up in the making, guys. This thing is going to take off, okay? We're going to get something that looks like this. You're going to look around and go, holy shit, that thing held really well. It was just like John said, it went inside and up, and then it just took off. Okay? Now, this is a yearly. Now, I'm going to break it down into the quarterly. Yeah, you should be able to hear me for sure. And we only have one screen going, the Trendy John Happy Hour. Make sure you log out, log back in. That might be the thing there, Jim. Okay? Control Z. Guys, by the way, when you take something off your screen and you delete it, all you have to do is hit Control Z and it comes right back. All right, a lot of people don't know that either. Matt W, maybe you don't know that. All right, it took me like 5 years just to figure that out. All right, Control Z brings things back, even on Thinkorswim, which is pretty cool. All right, now check this out. This is a demand zone, okay, and I'm using Fibonacci's from 2020 into the 2022 rally, 21 rally, sorry, into the 2021 rally. And this is where, and I kept this on here on purpose to show you the confluence when you know how to place your fibs where they're supposed to go and how they really match up very well with supply and demand, which is really neat, okay? So your trend break for this year, for all the naysayers, for everybody that's like, if price keeps dropping and everybody's like, the market's going to shit, nothing's going to work, I'm here to tell you right now, if this quarterly candle does not close underneath the 38.2, they're going to be dead wrong. Okay? And they're going to wish that they bought the dip. when we're looking at these fibs, where is this trend broken? Does anybody know? As far as trendy Fibonacci goes, okay? I'm not talking about daily. I'm not talking about can we get short tomorrow. Where is it? That's right, underneath the 618. This is the golden Fibonacci level, guys, right here. And what I really like about the RTY this year, even if I'm wrong and that breaks below, we got this really nice demand zone that's sitting right here, folks. All right. But we have a demand zone here. So if it comes back, I expect it to bounce. It would take a while to break through this. And then we're most likely going to bounce right in this area. See this big green candle? Right? That's what we call demand. You can see there's a lot of volume behind these candles. This is where people wanted to buy. And so I really feel like we're in a good position, even if we pull back for a nice rally in this thing. Okay. So again, inside and up formation. And then the only difference between this chart and the rest of them is that you actually have supply above, right? Do you guys notice that? So on ES futures and on the NASDAQ futures, you do not have supply above. We're using Fibonacci extensions. So this is why this one is different. This is your supply zone, okay? This is your mother candle. This is an inside candle, and this is your down candle. This is a inside and down, a supply zone, and price will have to chew away at this supply. And basically what will happen on the backside is that your ES and your NASDAQ will come together. They'll start to make new highs, and then this guy will chew through supply, and there is a projection of 2,632 by 2,864. Okay. Again, I'm a buyer in the green. I would slow down here. It won't be easy. I would rather trade ES and the NASDAQ. Okay. But in this small caps, we're looking at supply above it. Far as this quarter goes, what do we say when we have opposing zones? We have a demand zone here and we have a red zone here. What do we expect, guys? We expect chop, right? That's right, exactly right. So this looks a little bit different than the rest. This looks choppy, all right? And that's the big thing going into 2024. It's going to be choppy until it's not. Your bigger move happens below this guy, and your bigger move happens above this guy, okay? So anybody like iron condors out there for long term, sell in here and sell here. Okay, so your iron condor is going to look like this, just like that. You like selling puts, sell puts down here, sell calls up here. Okay? Again, I'm not a financial advisor. I'm just using supply and demand zones. Okay? All right, so let's press on here to the YM. And these are my projections here. All right, so what does this guy look like compared to everybody else? The Dow Jones. Pretty much looks like, well, I'm going to show you. Whew, this thing is beautiful. All right, same thing. Check it out. Buy signal, buy signal, buy signal. You're forming an inside and up formation. All right. Now, one thing I learned a long time ago is when you create an inside and up formation, what has to happen, guys? Does anybody know? What has to happen in order for this to be like legit demand zone? What has to happen? Besides creating an inside and up, what has to happen now? It has to move, right? Look, I'm going to zoom in, inside and up. Let's just say this is us right now. And I'm like, hey guys, the inside and up formation looks pretty good. Like, I think we could move here. 2021 projection looks like it could be up here. We have to move. Demand zones. This is us right now. Okay? They have to move to create range. And at some point, we run out of buyers, and then price comes back down to hit that demand zone. Okay? Everybody understand? And then we buy here, and that happens. Sometimes it doesn't. Most of the time it does. Okay? So here we have to move like this. Boom. And then this could happen. Okay? Like that. But what can save you, and I want to make sure everybody understands, we started off with that disclaimer that even though I have 2024 targets, I want to reel you back in, okay, and help you understand that in order for this to happen, things is if this, then that. So this candle right here, guys, on the yearly, on the quarterly, it really doesn't matter. But this candle needs to go over the body in order for all of this to start taking flight. Okay? So you have to create these alerts and put why. Put yourself a little note in there. All right? And say, hey, it's a continuation now. Now we're starting that move. All right? Then we have to figure out when we go to a smaller time frame what we're looking at, okay, as far as like closer demand zones. Because see, I had this 2024 projection for you, but it doesn't mean it happens right away. Look at 2023, guys. Right? Most of you were probably thinking this was going to be a really terrible year. And then right towards the last 9 to 10 weeks of the market, we came back and made all-time highs. Pretty incredible. Okay? So check this out. We have a demand zone down here. Okay? Nice move to the upside. If for some reason we come back to support, all I'm saying is, and I need you to understand what this looks like. You need to be able to draw this stuff. We come back to support, it bounces. Okay? Like that. If we break down, it comes down to demand, we're buying here. And then it will stall here because most likely you have a quarterly inside and down. And then it pulls back. It goes sideways, and I'll teach you all this stuff every single day, right, when I'm coaching. But all this stuff will become second nature to you, okay? So right now, on the Dow Jones, things look pretty good. It looks like the rest of the market. It's just digesting after a very nice quarterly candle. Simple. Think about that. Big picture, man. Everybody's freaking out. One big quarter candle. We're digesting before earnings. Let them digest it. Let all the naysayers talk about it and perseverate about it. And let's just focus on the levels that are on our charts. No matter what I'm showing you, whether it be an annual or a quarterly chart, I want you guys to just know what to do when we get there. And that's why we're here every single morning with you to help you get into these trades. Possible rejection for the Dow Jones, 4164, 2024 target, 43,275 by 48,000. Now you may be asking yourself, are these projections, are they too far away? Are they within an ATR? You're more than welcome to check them. I'm not using ATR or anything like that. I'm showing you how I'm getting these levels. We're using very simply just looking at Fibonacci extensions. Okay? All right, so once again, this is your yearly. So if you want to get like a good idea of what the ATR is, we have that script, right? We have that indicator. But you can come back here and go, hey, in 2023 we were at 31,000 and we closed at 38,000. So about 7,000 points. Okay? And you can see here it's about the same to the upside for me. All right? So we're within where we could definitely be. And so I want everybody to understand that. Yeah, so these lower ones, I would honestly just be looking for a daily, a weekly, something like that. even on these high time frames. And to be very honest with you, if we happen to get here, guys, I'm going to tell you what I'm going to do. I'm going to say it just like this on the mic. Hey guys, I don't care about being exact here. I'm going to go ahead and start legging into positions out of the money and with probably 6+ months of time. Okay, everybody understand that? That way you can be ready if we get there. Okay. So what I'm going to be doing, let me show you just really quick. I need everyone to understand this. I want you to visualize this chart. Okay. I'm going to take you to a whiteboard. This is what you're looking at. Okay. Looks something like this. And let's just say we get that high. All right. And let's say that I got this demand zone down here. And we start to make these little highs on the weeklies, the monthlies, or whatever. And then we start to turn down. All right. You're having a great old time. And then this happens. Right here, I'm going to say to you, hey guys, I am buying out of the money. Can anybody tell me what I'm targeting? And I'm going to buy out of the money with time. Okay? What am I targeting? This right here. It's going to be an inside and down formation. And if this happens, and it typically happens once to twice a year, where we come into high time frame demand zones, and I'm telling you, I know this, I've been doing it live for many, many years, everybody will freak out. And if you could just hold, which we always have a hard time holding, you, me, all of us, but what we'll end up seeing is this move all the way back, and let's just say this is the ES futures, and this is 300 points away. That's $30. What is the beauty of buying these contracts when we come to this demand zone? Can somebody tell me? What's the beauty of buying these contracts? Somebody tell me. All right, Craig, take care, man. They're very cheap. They're very, very cheap. That's the amazing thing about supply and demand. All right. Especially on high time frames. People are really, really scared. And so the premiums kind of get jacked up, but not typically right away on the call side. When price hits down here, it'll be a lot less expensive. Okay. So you really, to me, you're buying them like pennies on the dollar, if you will. And then these people who are still sitting on their hands will typically take about 2 weeks before they really get interested. And they're the type of people that say, well, I'm too scared to buy. And it's okay if it's you. I'm not trying to make fun of you. But, they're too scared to buy. But unfortunately, they wait for 2 weeks when price looks like this. And prices already moved thousands of points to the upside, and they're finally going long. It's like some of the people's indicators that I'm seeing on Twitter lately. They have such a short time frame, like their memory is really short. And I remember specifically them saying, and I remember these people, they said that they had a short signal in October. They said right before the New Year's, before we went on break, that they were finally getting a long signal. And now they're saying they're getting a short signal. All right. This is pretty much, that person's indicator is pretty much like a retail trader, right? I mean, seriously, it's absolutely like off. Like, you should have been long in October, right? And as we were headed into the new year, you could have taken some positions off. All right? Pretty straightforward. When stocks are making new highs, can we rely on supply zones? So, the way that I teach supply zones, and Ferment, I'm not sure if you've been with us for a long time. It's really straightforward. Okay, let's say, so first of all, this is not a supply zone. That 2024 target. This is blue skies. This is just a Fibonacci extension. But let's just pretend that there was structure there and that we had a supply zone there. Okay, I'm gonna make this really easy for you. It's not part of tonight, but let's just say that's a supply zone. I teach this very easy. Once we get there and we break through, okay, just like this. Now this line, this proximal line becomes your support. I'm going to tell you to measure and anchor your Fibonacci's. We're going to find the 23.6, and I'm going to tell you to stay long as long as we hold the 23.6 and that we're establishing and holding that proximal line. That will be your support to stay long. And we do this on a 5 minute as well, but it's fractal and you're going to use it on your higher time frames as well. Okay? All right, guys. So that's your Dow Jones. And then we're going to come over here. I'm going to show you a couple, all right, just a couple. And then we'll stop and kind of open it for questions and let Melissa talk if she wants to. And you guys can talk to us about any sort of I don't know, anything. Like, hey, how do you do this? Or I'm having a hard time doing this. And sometimes I wish I could just get you guys on the mic. I miss my Discord days. We let people talk on the mic, and you guys could just talk to us and make this a lot easier. So let me get this one out of the way. Let's do Bitcoin really quick. I love doing Bitcoin. I think I've been right on this every single year. So I definitely want to show you guys this, and this is special for me. Like if you've been following me for many many years, my charts are pretty special. The more special thing is like how you react to them. So I'll sit up here and show you these, but you know, I would say 7 times out of 10, even though you know what the charts look like, you're going to trade them exactly the opposite because your emotions get in the way of you. Okay. All right, guys. So this is the 2024 projection for me for Bitcoin. 62,000 by 69,000. And what's really funny about it is I kind of laughed at myself. I said, well, shit, it's Bitcoin. It could literally happen like in 3 weeks. You never know, right? But what I do know is that this is what I'm projecting. So 62 by 69. Currently, we are on a quarterly candle that is just kind of indecision. But you'll notice when we take a look here, you'll notice that we came back to the trendy edge, and this is what we'd like to see in the ES and the NASDAQ and so forth. Notice we came back to the trendy edge, and we found support here. Okay, and that's exactly what's supposed to happen. And again, got to give it a little bit of time, let it kind of work itself out. If we break down below, we want to be looking at things like Coin, Mara, all these names that run with Bitcoin. By the way, guys, there's a Bitcoin decision coming up if you didn't know, and it's whether or not they are going to release the ETF or whatever it is. And if they do so, then I think this thing's going to scream. Okay, just so you know. So I've definitely got my eyes set on Bitcoin for the next several weeks and any name that's affiliated with it. I use Bitcoin futures just like I would on the ES and the NASDAQ. Anything that's related to crypto, this is my mother. This is what I'm watching. If I think Bitcoin futures is coming back into this zone here, then I expect Mara and everybody else to follow suit. Okay? So the way this is going to work right now, all right, is that this is your level where I would tell you, hey, let's buy anything affiliated with crypto between 35 and 31. Notice that we have confluence down here with this 9 EMA, okay? And also up here, this is your short-term support right here. I do expect us to kind of like go back and forth. And by the time we break the golden fib, I expect a rejection. And then once we break above, we'll be looking for that move into that 62,000. Okay. When I apply the Fibonacci's, this is exactly what it looks like, guys, right here. Okay. Yep. Is that it right there? Jersey Joe, coin plus ARC, Bitcoin ETF tomorrow. What is that, man? That just come out today or something? Oh, tomorrow. Okay, cool, cool. Awesome. All right, so check this out. So you guys see that? Did you everybody see how I put the fibs on there? Let's go ahead and take that off. Boom, we're gonna come up here to the pivot high. Doesn't have to be exact, come down to the pivot low. All right, and that's how we do it when we're trending up from a downtrend. Okay, we gotta place our fibs here and here, and then we apply the Fibonacci that I teach. So the 50, we expect chop. It's going to be choppy in here. Once we break the golden Fibonacci, now listen to me. I'm going to tell you this probability. Some of you guys have listened to me over the years. Some of you haven't. Can somebody tell me besides Melissa, if the 618 breaks, what is the probability of the 88.7 being hit? 85%. Okay. Now I learned this from a gentleman named Jeff, who was one of my mentors when I attended Online Trading Academy way back in the day. Okay, I learned from him. I learned that specific thing from him, and I had to go back and back test it. And he taught me something that I thought was really really cool. All right, now check this out. And this is what he taught me. He said, John, it's 85% if we just kind of go through it like this, okay? 85%. But if we get to the 618, okay, say this is the 618 right here, and we just kind of flag and build, we have a 90, I think you said 92 or 95% rate that we're going to, boom, hit the 88.7. All right. Now, in order for you to backtest this, you need to go back and you need to find ranges. You got to put your Fibonacci's on there and see it. Now, I've been, trading this and testing it for many, many years, and we actually have setups based up off of this particular strategy right here, which is super cool. All right. So, boom, there it is. That's what I'm looking for. And check this out, guys. Let me see how much you know Fibonacci, though. I feel like I need a shot of tequila, but I'll take it easy. All right. So in this fib that I have placed on here, when is this bearish again? Awesome, Herbert. 38.2. Okay. Now, Herbert, what's awesome about the 38.2 when we zoom in is that your 9 EMA is confluent. So even though crypto may pull back here, I would buy here. Isn't that cool? Right? So we have confluence here, guys. So, to me, there's a lot of signs that tell me to go long if we get the opportunity. And that's my whole thing is like, I like opportunity. All right. So I can't help but to see opportunity when the market's going down. All right. It doesn't matter how you guys want to do it. If you want to short, do it. If you see opportunity, wait. Just find your levels and then trade off of those. Okay. So this is my Bitcoin projection for this year. It really is straightforward. And once again, guys, if you go into the notes section, you're going to see some more charts in here. And we have PayPal in there, CELH, BMY, and some of these I've already started. SMH, I put this in here today because of all you guys who are looking at, NVIDIA and all your semiconductors. And I heard some stories that some people went super long into the end of the year, and then you got crushed on the open. And I am very sad. I want to go over SMH with you really quick because I think this is important for all you guys that love those stocks. Okay, inside candle. If it's inside and we have 3 months before it closes, then this means we are stuck in a range. So if you're trying to buy the dip on semiconductors or anything like that, I need you to find the demand zones. Only execute at the demand zones if you're looking for a long-term play, please. And please use the quarterly and no, I would say no less than the weekly right now, unless it's an intraday trade. Notice here, I have a zone for you between 156 by 134. I understand that it's $20 wide, okay? One thing that you can do, this is a very easy trick. Everybody, will on the mouse, come down here where it says quadrant lines. One of our members here taught me this because I kept putting fibs in here. All you have to do is select the bottom here, go up to the top, and we're going to break this down into 3 quarters, and these are going to be your levels within a zone. So I got a question earlier, like if this breaks down, do you go long automatically? You don't have to go long. Go long on a reclaim or wait until we get to the 25. Does everybody understand that? Did you guys just hear what I said? Put the quadrants in here, break them into thirds, okay? All right? Put your quarters in there, I should say. Put your quarters in there. Don't go long until we reclaim or we hit one of those levels and you start to see some love there. Okay. This is how you break down a zone. Very, very easy. And what's really cool is if you went to school like me, holy crap, does this like save you a lot of time. Instead of coming over here and trying to find out where you put the structure, it's just amazing how it works out. Let me just kind of show you an example impromptu really quick. See how we have a 50 right here? I would teach you to put your second line underneath the body of these candles, and look, it's right in line with my 50, which is really cool. All right. So it's just really neat. And right here, I would use this wick and boom, there's a line right there. So this is like the quickest and coolest way that you can do this. Okay. Everybody understand? All right. So my projection for SMH is actually 185 by 200.55. And for now, I'm going to tell you this. I wouldn't be long on semiconductors until we can show that we can get above 168 and a quarter, or if we can get down into the 156. Now, that's all I got for tonight. I really want to, because I could talk forever. Um, but I want to talk strategy now. So, Mel, I don't know if you're around, if you want to jump on the mic or not. I don't want to put you on the spot, but if anybody has questions around strategy or just questions in general, just any kind of anything, man. Hey, John, what do you do after your worst loss in the world? Or, that type of stuff. Please, please, let's talk. All right, a couple questions. Simon, when you have an inside and down or up formation, but the down or up is a gap, how do you chart that? Example is Rivian 1 day chart. I traded today, mother candle 12/19/23, and then gap down. So what you do is you fill in the gap. Okay, you fill in the gap, and let me look. Okay, and let's go to the daily. You talking about how there's a gap right here? And okay, cool. So what I want you to do, and the same thing that I was trained on back in the day, and it really does it really opens up your eyes. Is what I want you to do is first of all, is this an inside and down? And when we come across here, I'm gonna point this out to everybody. This is the mother candle. This closed inside. Okay, Simon. This closed inside, that closed inside, that closed inside, that one closed inside. So this is exactly an inside and down. So what you do is you fill the gap and you go like this. Do you see that? This is an inside and down formation. Okay, you see that? This is what this chart actually looks like. That's all you do. Just fill in that gap. Everybody see that? Okay. That's a great question, by the way, and thank you for answering that. All right, so on this particular trade, by the way, since we're sitting here, this is how I want you guys all to approach this, and this is where I'm gonna start getting passionate and probably talk for another hour. But let me ask you a question. This is what you should do. You got levels, right? You got levels on the chart, right? Where do you go long? Boom. 200 SMA, you got a lower edge, and you got this edge right here. Say to yourself, do not speculate. When you have something that looks like this, please don't speculate. Don't go to Twitter and look for your best friend to tell you to get long or anything like that. Say to yourself, if price can reclaim 1985, I'll try to go long. Even though you know there's a cloud here, if we can reclaim that, I'm going to try to go long. If price gets to the 200 SMA, I'm going to try and get long. If that doesn't work, I'll add at 1751. And if that doesn't work, my final stop would be a break of this inside and up formation. Does everybody understand that? I need you to be that fast, and that's how fast you should be analyzing. You're welcome, guys. You're so welcome. And I understand it's late for some of you guys. Got family, got to get, you got to eat and do all that kind of stuff. So don't worry. We're still recording here. All right. So you guys understand that? So I need you to be able to do that. I wish I could put all of you guys on the spot right now and make you do a chart for me because I need you to know how to do this. So, Doug, if it helps you, most people lose most of their money during chop. So Ed P, on your question about the PMZ, this is what I'm going to tell you. I'm going to come over to ES Futures really quick. Let's talk it through on the PMZ trade itself. Okay. And there we are right there. We're going to come over here to PMZ. And I actually already marked this out for you guys. So can I ask anybody in the room right here, any of you guys, not take this trade, or this trade? Did you wait to try and take the trade here where it failed? And I'm going to repeat myself. Do not be the trader in here that needs to watch things work over and over before you take a trade. Just try it. All right, just try it. You're gonna feel so much better when you try it, whether you win or lose. I just need you to try it. All right, stop trying to analyze everything. Right, I promise you, this stuff has been around a long time ago. People have been trading the PMZ for many years. I didn't test this for a couple weeks and then come out and try to sell it to you guys. Okay, this has been around for many years. All right, and it's as simple as possible. You go long above it, you go short below it. All right. You can, if you want, okay? If you want to break it down and make it a little bit more juicier just for you, then feel it. I mean, do it. I don't care. I got people who have told me, hey, John, your PMZ changed my life. I went in and changed some stuff and made an algo out of it. Okay, cool, man. Whatever. All right. For example, price goes over this, it's over the cloud, go long. If you're asking yourself, this is what I find, and I find this is where Melissa and Melissa does very well, obviously. All right. This is where Melissa and I differ. I get kind of, I get in my head, man. If I don't take this aggressively and I wait for a close, I promise you, this is me right here. If I waited for a close, this thing would close right here, and my stop would be down here. Do you guys think I'm taking that trade? Do you guys think I'm going to take that? Anybody? I'm not. All right? I'm not. I'm scared. Be honest with you, I'm scared. Okay? So, what I always tell everybody is I would much rather be wrong here because the risk today was only, what was it? We said it was 3. I'd rather take this trade because I know that it's 3 points. Okay? And instead of taking this, what if I'm completely wrong? As soon as I take it, it goes straight down, and now I've lost like 12 points. I'm going to be so pissed off. My day's going to be ruined, and so forth. Now, this is not taken into consideration that we could buy the 23 and 38. So if I measure the move and I wait for it to pull back, guess what happens, guys? You buy the 38.2, and this is all impromptu. That's how well this system works. Buy the 38.2, and boom, you're off to the races. Okay? But I'm talking from a PMZ perspective. And what I find, and since we're on this subject, what I find is some of you guys are over analyzing the PMZ. You're over analyzing the PMZ because there are other factors to get into the trade. You're like, well, it's doing this and it's doing that, so I'm not going to take a trade. Okay, you know what? Just forget about the damn PMZ for a second. Okay? What about taking the trade when the candles turn colors? Has anybody in this room actually gone back and studied what if you were to take a trade every time the colors change, candles change colors? Has anybody done that? Seriously. All right. Now, have you went back and studied every time the candles change colors and we go above or below the cloud? Seriously. There are many things in here that should get you guys, get your blood pumping to find what works the best for you. Now, we teach you in here to go long or short below, and I tell you when we get to the red boxes to go short on this right here. Did any of you go short today? Any of you actually go short here? Okay. I'm happy. I'm happy to hear it. We have a shitload of people in here, by the way. So it's like, you know, I would expect some of you guys to try some of this stuff. I remember, when my room was really small and it was like crickets. All right? I mean, it works. And here's the thing, guys. I can't say this more than enough. When it doesn't work, today specifically, you should only lose 3 points. Okay? You should lose 3 points. That's it. And if you keep doing it over and over and you keep losing, you're not doing something right. Something's not really adding up.
Hey, John,
Hey,
real quick.
yeah.
There's been several questions about how to stay in a trade if
Mhm.
they only have one contract. Can you
Mhm.
show an example of how, even with one contract, the
Mhm.
38.2 would have held on that position all the way to that red box?
Yeah, yeah, let's do that. So let's say Melissa and everybody out there, if you were going long out of the PMZ. So there's a couple things that I will say to you that, and if you've listened to me before, if if you notice that there's a level right on top of you, do you guys get a little like weary about that? I'd imagine you do. And I would too, to be honest with you, because that line in the sand is resistance until proven otherwise. So today, Melissa, I would tell you from the get-go, is a little difficult to get long here, because even me, like looking at it, it's like right there, and notice how we just keep popping up and smacking it, right? And it's like we cannot do anything around this thing, right? And then finally we break off. And so what Melissa's telling you on any of these, whether it's the ES futures, I think we did coin, right? Didn't we trade coin today as well? We did coin, yeah, right here. All right, so check out coin. This is a great example as well. So what she's saying is, once you go long and it starts to become profitable for you, okay, I want you to anchor your fibs the way that I teach you. Okay, so if we went long here, okay, and the rally started here, you're going to take your Fibonacci, and every time that it starts to pull back on you just a little bit, you anchor your fib. Okay, and we are going to do something just like this. Okay, and what she's saying is, stay in your trade as long as the 38.2 or the 23.6 holds. Now, I'll tell you, the 38.2 is going to give you a little bit more leniency, right? A little bit more flexibility. 23.6, depending on how big the move is, doesn't necessarily give you a lot of flexibility, okay? But in this case, notice, we anchor here, it doesn't break down below the 38.2, okay? You're still making money. Boom. It goes up here, it starts to pull back. Obviously, it does not pull back to the 23.6. Okay, it only has a very slight pullback. And then it keeps going right there. Okay, it pulls back. Okay, notice 23.6 holds, 23.6 holds, 23.6 holds, 23.6 holds. Oh, there we are. We made a new high. And look, we sold right at the high, by the way. Boom, we come up here. Okay, check this out. Now, you stay long as long as this is holding. But there is a rule to this. As long as you're okay with it. Everybody understand? As long as you're okay with it. All right? So Melissa and I will teach you, but if you're only sitting on $10 worth of profits and you look at the number that's down here on the 38.2 and you do the math, you're like, yeah, but if it goes to 38.2, I'm going to lose my $10 plus another $20. Then don't do that. Use the 23.6, okay? Instead of the 38.2. All right, so Matt W just asked a great question, and this is the big difference too. Melissa always, I think always, Mel. I don't like to say the word always because sometimes we can, sometimes deviate. But she, for the most part, I feel like she always tells you she's waiting for a candle to close. Right, Mel?
I'd say 95% of the time, yeah,
Yeah,
absolutely.
yeah, and the reason why, and I've said this before, is because the market's pretty smart, and these guys are way smarter than we are. And most of us are putting our stops around the same spot. And so what the market does is it comes down and it will wick you, okay? And then you'll watch things just go right back up. All right. So what Mel and I have found over a long period of time is that a lot of times they'll come down and wick you, all right, on your 23.6 or 38.2, and they'll take your liquidity, boom, and it'll come right back up. And by the time, whatever time frame she's using, or I'm using, or you're using, it'll come right back up and then go right back this way. It's such a valuable lesson, but it's not easy, Matt. And if you only have one contract, it can be, I guess, a little bit more intimidating, right? Because somebody with multiple contracts can scale out, right? And then they just have one position left and like, hey, I already made a couple $100 or a couple thousand on the way up, and I'm just going to keep this one. The problem with one contract, in my opinion, and I say the problem, is that you don't get to, fill yourself out in these kind of emotions. I actually think, and I'm sure somebody's going to disagree with me. I actually think your emotions holding one contract is worse than your emotions holding two. I really do. Because at least when I was trading or when I'm trading one contract, I really want that one contract to work well, right? And I needed to go up, 100% or 200%, or I needed to turn it into 500%. When really I could have had five contracts and trimmed them all at 25, 30% and kept one. And what that does for me is I always look at that. If I had five contracts, I just made $500. I have one contract left. Now, instead of like putting my stop so tight, I can think to myself, well, this one contract's only worth a dollar, dollar 50, and I just made 500. So it's really like free to me. So now I'm free to give it the leniency that it deserves. So I mean, it's just something to think about. But if you are trading one, then I would personally like try to take your one contract, do a test, do one contract using the PMZs and having fun like that kind of stuff. But I want you to try to buy one contract in a daily or a weekly edge or zone and try to hold that contract. That's what I've been working with my neighbor, right? Telling him, hey man, I need you to concentrate on the bigger picture. Like try to hold some of these positions, right? Because you don't have to intraday trade all the time. You can hold some of your stuff, they come back to life. I mean, how many of these contracts, like, look at UNH, that thing was down. What was the one right before that when our contracts went deep in the money and they were at like negative 70%? You just gotta like respect the time frame that you're on, is a really big one as well. So if I were, and sorry, I'm just trying to go through the questions here. If I were, um, when you hold contract, how do you stay in with 50, like a 50% loss, Doug? Is that what you mean? Yeah. Yeah. If you have a 50% loss, the best way that I can tell you is and I know that I bring this up all the time, but in Melissa, I know that you agree with me. She tries not to look at her PL. Like she doesn't look at it. And we are trying to teach you all to rely on the chart and not the percentage, Doug. See, just that statement right there says, hey, what do I do when it says it's 50% down? Let me ask you a question. Did it break your rules? So if you have a chart and it looks just like this. Let's say it looks like coin right here. Okay. And your rule when you got into this trade, okay, let's say, Doug, I'm going to give you an example. Let's say you were looking at the future edges and you were like, hey, man, I'm taking this trade as long as 147.85 holds about 2 weeks and my goal is 169. All right. Well, let's say that Doug bought it right here, sorry, at the top, right here, and then by the end of the day, he's down 50%. He looks at his PL, he judges himself, and most of the time, Doug will get out of the position because he's down 50%. How many of you have done that and then watched the trade actually work out? Any of you? I'm sure almost every single one of you. And if you can learn to look at it like Mel and I, to me, it falls right into that category of you're doing things just like the 95% of other traders. And if I was a market maker in charge of the market, I can easily make your position look like negative 50%. I can easily make you feel like you don't know what you're doing. And then, lo and behold, the chart works out. And then your 50% loser you took could have been a 300% gainer. So, what does it all boil down to? It all comes down to the fact that are you trading also with something that you're willing to lose? If you're not, you're going to be tighter, and it's okay, but are you still following your trade process? Right? What is your number? And that's what I talked about in Orlando, and you guys know that. I bring it up all the time. Find your allocation that's suitable for trading, not the one that like you're hoping you're going to make money and you're not following your process and you're getting out of your trades too early and you're getting in or you're getting out too fast. That's because either one, you're trading off of fear and emotion, or two, you're just trading way too much money and you don't know what you're doing. Right? I think so. I mean, just try it, Doug. Right? First, trade with something you're comfortable trading. Two, take a trade because of the chart. And three, do not get out. You've already accepted the loss. Hey man, I'm buying a $300 option. I could wake up tomorrow and this would be at 80% loss or zero. Okay, you're good to go, Doug. So don't get in the way of the trade, man. Obey the stops, obey the targets, and just let it trade, man. Forget about the percentage. Who gives a shit? Right? I mean, who are you really trying to prove to anybody? Right? Only to yourself. So, I mean, who cares if you made 50% or not? Did you follow the plan? Right? The the gain from that is the byproduct of you actually following your chart. That's probably man, now I say that out loud, like it's really difficult because we are told to look at that, right? But we're all told to do that. Yeah, it's slide puts. I saw us break below the daily 21 and I closed out the position. My plan was to hold my puts if we broke the D21. I'm my own worst enemy. Yeah. It's very difficult. Here's the last thing I'll say as well. What if I did I asked you to do all the things I just asked Doug to do, but you actually listen to me, Jersey. You actually walked away from the screen, my friend. What if you did that? All of you. Try putting on some trades, putting stops and targets, and just walk away for a day. Let your positions do whatever it is they're supposed to do. You cannot control the market. I promise you. It's just like John said, you know, you can't you can't sit here and do anything. If anything, you're just going to get in your own way. All right? They do. They do a lot. I mean, to me, there are times when you're like, damn, if I wasn't in front of the charts, that wouldn't have, it wouldn't have worked out that way. But there is this thing that to me is so uplifting when we're away from the charts. But, it's winter time. It's been a little cold. I don't really have a whole lot to do either. So I'm trying to do chores in between and not put too much focus on the charts. But um, just execute. I mean, I hope I show that example today by trading four things right in front of the options room and just executing. Like, don't be afraid, man. Just put on a trade and let it live. And if you're coming with baggage from another room outside of Simpler, or maybe a room here at Simpler, and you've lost money and you're going to lose money here too. Okay, we're not perfect, but try to let go of all your past, and I need you to start thinking completely different and set a goal for yourself this year. Remember, journal. Also, say to yourself, maybe one day out of the week, you're going to take a trade. You're going to come in, listen to Mel and I. You're going to look at my blueprint and go, okay, John's thinking he's kind of bullish. We're at a demand zone. I also wanted to go long on NVIDIA. So I'm going to take a trade over the PMZ on NVIDIA. And if it gets to my target, I'm going to put in a sell for it. But I don't need to be in front of the market. How hard is that? You know, right? We were at a demand zone on the ES futures today. What if you just told yourself to go long above the PMZ? I mean, this trade right here, guys, going long above here, 477 into 485. That's almost $8. And you're going to see this all year long. I'm going to show you examples, and you're going to keep saying, I promise, John, I'm going to do it. I'm going to do it. Do it. Walk away, buy an option, leave. Go do something fun, and come back and be happy. Be like, holy shit, I got 200% on that option. I wasn't even in front of the screen. But I say that, then I won't see you guys anymore. Yeah, so the PMZ is called the pre-market zone for that very reason, Darren. So the idea on the PMZ is I took the specific time within the pre-market, not the entire pre-market, and I used the data within there to use this zone. And because I basically just went back and back tested for, gosh, man, for a very long time. And just to be very transparent, it was years ago. It was my wife and I sitting down in front of the computer. I gave her a notebook and I said, this is exactly what I need you to do on every single name. We went back and did that. It was really, really fun. We actually learned. This is a little kind of insight that I'll give you guys, especially on big beta names. You can literally come in and again, we tested all this stuff. You can literally come into the market and set up OCO orders to go long and short, and it's pretty amazing. And it blows my mind. A lot of people don't do this. So if let's say that today on Nvidia, um, you set up an OCO bracket, right? And on the short side, you're like, I'm going to go short if NVIDIA breaks below, so it'd be less than or equal to this number right here. And if it broke down below there, you would have a target, and then you could set it up with a stop if it broke back above by, I don't know, a percent or something of what you bought it at. So you get stopped here, but your other OCO would be you're going long at 477.71, and you're not getting stopped out unless it breaks or closes below the line in the sand. Well, you would have been stopped on the put side, but you would have made a shitload of money on the call side. And this is pretty incredible, especially when you're looking at big beta names. So just something to take back for any of you guys that are, pretty techie like that and like to look into those things. When I first started out, a lot of people were like, you can't go long and short. Yes, you can. I show you guys that with the debit spreads that I do as well. You can literally make money by by buying calls and puts. So
But we can't do that because it messes up our API alerts is the reason we don't, guys.
yeah, it's really frustrating, Mel. I mean, honestly, it is. And yeah, it's very frustrating. all I want to do, and I'm trying to get a hold of that Mark guy for that competition, is because I heard it's still not too late. All I want to do for that competition is literally trade the SPX premium chart. It works. I know it does. We got people in here trading it every single day, and it's like you gotta just be a machine. Just sit there and boop 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 boop, you know, and make a lot of money that way. So
Steve had asked a question, John, of why we are more of buyers than sellers. And I explained in the chat, but, and I'm pretty sure my, what I explained would match what you would explain, but because the market is in a bull trend right now, our focus is on finding setups that go along with that trend. Right, John?
yeah, I mean, so when you say buyers instead of sellers, was he talking about like selling credit or
No, no, no. It, bull. We're bullish rather than bearish.
oh, more bullish than bearish? Yeah, I mean, it just kind of depends. Like, I guess it depends on my mood. I mean, to be very honest with you. I mean, there's been times that I think even for you, Mel, like you'll come in and knock out puts, and I'm like, oh, this came out of nowhere. But I guess it depends on what you're looking at. And I think that's the hard part is when you first come in, like, let's just look at NVIDIA, right? The market feels bearish, right? But there's a lot of things to take into consideration, like the fact that when I came in this morning, okay, so if we're just talking about the new year, right, we've only been 3 days in. Um, the 10 weeks before that were all up. So we were definitely bullish. And I feel like then it's a matter of is there a demand zone? So when I come in, and it's a great question. When I come in and I look at a specific chart, the question is the risk to reward better on the put side or the call side? Okay. And so as a demand and supply trader, if I come in and I look at our edges. And remember, if anybody's new in here, you may not know this, but the trendy edges identify supply and demand on multiple time frames. They're color coded. Okay. So for example, if I would have came into today on NVIDIA, I would have to ask myself, am I low on the curve or am I high on the curve? Okay. If you're low on the curve, then I'm looking to buy calls or go long in equity. Okay. So for example, when we came in this morning, we had trendy edges here. Price dipped down on NVIDIA. I'm looking to go long. Okay. Now up here, if we're opening up at this, then I would just be cautious. So it really, again, Mel, it's just really it's the trend, but it's also has to do with the cycle. How many days are we down? Right? I'm typically looking 2 to 3 days down. I'm looking for a buy. So how aggressive am I going to get on the put side? And for me right now, I feel like I'm in the same ballpark as a lot of people. Is that I would rather have a hedge on and still trying to buy the support levels until I'm wrong, you know. And even then, though, I'm scaling in. So there's really no for me. There's no bias either way. So totally up to you. But you got to understand too. I could be shorting the futures. So not necessarily buying puts on the day, but if I'm long, I could be trying to go short on the futures and so forth. So and really, that's really what it comes down to. So and let's look over here. Let's look at the last 3 days on SPY. Looking at the PMZ. And we're going to move right over here. All right. So when we came in, and somebody correct me if I'm wrong, did we come in on Tuesday? Tuesday, Wednesday, Thursday. Is that right?
Yeah, we came in on Tuesday, John.
Okay. So this is Tuesday, okay? We woke up to this, okay? So I'm just going to kind of go over with you my thought process on that question you said Steve asked. So on something like this, I definitely not want to buy puts. Why? Because we're opening up down, and I would have to go back and look at my blueprint, but we might have been around what I thought was support or demand. It just didn't make sense for me at that time. All right. And then if we move over here, in this specific one, you can see here, this was a great opportunity to go short. And I'm trying to remember, I know that I shorted or whatever in some futures, but this was perfect to go short on the SPY. We never broke over. Actually, this is the day, Melissa, right? That on Tuesday or Wednesday, I gave you guys the video on how to short the cloud, and you guys can see this worked out really well if you did that. And then today, you know, I wanted to buy the dip, so hopefully I can show you that I like buying puts as well, but it really is going to have to depend on the conditions of the market. So
Yeah, I
yeah,
explained in chat that in August and September of this year, when we were in a bearish market, I felt like I was cheating on my husband. I bought more puts than I had calls, and it felt very weird. So
yeah,
for
yeah,
me, that's where I rely on that. Are we closer to supply or demand, and what is the trend of the market?
yeah, and I mean it's also it when we come over here to the higher time frame. I think that this is where they get you on the put side because I have to say that I'm very proud of us as a room that I don't think once was I like, we got to jump in puts during this entire time, right? So, like, to me, like having a process to keep us long and the idea of being long through this when everybody, man, I think for shit, five, 5 of these 9 weeks, 6 of these 9 weeks, people are like, we can't go long. We can't go long. And there's hardly anybody actually trading as much as we were, Melissa, you know?
For sure.
And I
Yeah.
think and I think the hard part though, and this catches a lot of people off guard, is that this gap down, right? Just like Jersey was saying, it's the gap down. So you didn't
Yeah,
get
but measure
right.
that move and look and see if we're not getting close to the bull channel there.
Oh, we are. I mean, you can see it right here. The trendy edges are right
Mhm.
here. So this is why, I'm not shorting here, but also I I bought put debits on this week right here. 2 weeks before, right, this drop. And I would need, actually, I need this trendy edge to break down for me to get paid. So, it could work out for sure. And to be honest, if we start to break down below these trendy edges, guys, we probably should be more or less looking for more puts, because then I think we're headed into the cloud down here. So, but I mean, I'm hoping, right, that they give you the opportunity and not give you gap downs. Um, if you go back to COVID, that was really difficult as well. There was huge gap downs, unless you just kind of had it, you just kind of knew, and you got lucky, and you were already inputs. It's a great feeling. But if you're like, oh my god, I need to get inputs, and they keep gapping it down, it's really difficult to do. That's for sure. The spy puts are 40 something. At the time, they were 60 days. And we have, let's see, I have 43 days right now. 43 days. Hey, no problem, Ed. You're welcome. You're welcome. Tony Patron, are you still here? Rules for buying leaps? I mean, if you want, I always think if I'm buying a year out, I'm going to be wrong for a bit. So I always buy out of the money. That's just me. So Tony, on the day when you open up, so let's just go to SPY tomorrow. Let's say like a 5 minute. Okay. Um, you're going to use the pivot low, and if you're trying to use, so right here, okay. So in this area, this is yesterday's range. Okay, well, sorry, it's still today, but this is the range. You could just draw that. So, Tony, if the market were about to go bid and start to push to the upside, hey, good night, Miami. If the price is going to move to the upside, you understand where to put your fibs, right? So to apply the Fibonacci, do you understand in this range here? Okay. So you shouldn't have a problem. Just come up here, right there, and then you apply the methodology. All right. So this is bearish until we can get about 468.55. Understood? And the trend is not broken until we can get about 469.46. If 469.46 holds, 85% probability we could see 470.5. Okay. All right. Good night, OEM. All right. So yeah, I know you guys need to get to bed, and it's damn, it's almost 9:30 here too. So, and I'm not supposed to eat after 9, and I'm kind of hungry. So I'll probably take off as well. But I really appreciate you guys. When we get together for the next happy hour, I'll spend some time actually making a cocktail. But it is dry January for me right now until I get on the cruise. So um, but I appreciate you guys and thank you so much for hanging out with us. I hope it helped you out, and we're gonna be knocking it out. Don't worry, guys. 3 days in, that's it. Just 3 days in. All right, we got to get those numbers up for you guys. Today was like, what was it, Mel? This is the first time I saw more numbers on the losing side than on the winning side. So I have to. I was kind of like from an intraday perspective. I was like, did did you have all wins today, Mel? And again, I know people are trading their own stuff, but I think,
Yeah.
yeah,
Yes,
you
I did.
had, and I think I had like 4 or 5 trades that I only took today that were all winners. Um, well, sorry, the SPX was not a winner. My bad. So the SPX butterfly was not a winner. So, but I did give back. So I did. Well, I didn't give back. The market took back 3/4 of my unrealized profits today, which was kind of frustrating. So just one of those days, man. And that happens a lot during these type of markets. So just got to bear with it. 5 trades, 3 profitable. Nice. Good job. Good job. Good. I hope you guys learned some stuff. I hope you put that to the test. Put some of those yearly and quarterly charts together. And good luck, everyone. Appreciate you guys. We'll see you in the morning. See you later. Thanks, Mel. Appreciate you being here. And I appreciate everyone.
Bye bye, John.
All right.
See
Bye
you in the
bye.
morning.
All right.